Welcome to Smart Earnings. In this episode, we will be discussing financial results of Spencer's Retail Limited for the second quarter financial year 2025. Company overview. Spencer's Retail Limited is a significant entity in the Indian retail landscape, offering a wide array of products, including food, FMCG, and general merchandise. The company is currently undergoing a strategic transformation to optimize operations and improve profitability, with a particular emphasis on e-commerce and selective store expansions. Operational context. In second quarter financial year 2025, Spencer's executed a substantial ramp down of operations, affecting 47 stores primarily in the South and NCR regions. This restructuring involved a significant portion of the employee base and aimed to streamline operations without causing disruptions in continuing regions. The management emphasized the successful execution of this complex process, which is crucial for understanding the company's operational resilience. Financial performance highlights. Sales: 518 crore rupees, down 9.8% year-over-year due to operational ramp down and store closures. Declined 5.5% quarter-on-quarter from 548.3 crore rupees, reflecting persistent retail challenges. Operating profit: loss of 44.9 crore rupees, a significant decline from 1.3 crore rupees in the previous quarter, impacted by restructuring costs. Net profit: loss widened to 87.2 crore rupees from 70.1 crore rupees year-over-year due to higher interest expenses and one-time closure costs. Earnings per share: -9 rupees and 67 paise, compared to -7 rupees and 78 paise year-over-year. Cost dynamics. Operating expenses increased 2.9% quarter-on-quarter to 563 crore rupees. Depreciation surged 110.6% quarter-on-quarter to 63.6 crore rupees due to accelerated closure-related adjustments. Other income increased significantly by 116.3% quarter-on-quarter to 61 crore rupees, partially offsetting financial pressures. Interest expense lowered 7.0% quarter-on-quarter to 39.8 crore rupees, but remained elevated compared to the previous year. Management insights. Consumer behavior insights. The management noted a shift in consumer behavior, particularly in discretionary spending categories, which have faced challenges. However, non-discretionary items such as staples and fresh bakery products have shown resilience, with mid-single-digit growth in these categories. The number of bills has increased, indicating higher footfall, while average bill values have decreased, suggesting consumers are opting for lower quantities or less expensive items. E-commerce strategy. The e-commerce segment is gaining traction, with a 20% growth compared to the previous year. The company is enhancing its e-commerce capabilities, including a shift to a 30-minute delivery proposition and expanding fulfillment from existing stores. Currently, e-commerce accounts for 15% of the overall business mix, with ambitions to increase this to over 20%. The average order value for e-commerce is around 900 rupees, which is higher than the industry average. Segment performance. In continuing regions, sales grew by 4% year-over-year, with gross margin stabilizing around 19%. The management is optimistic about achieving operational profitability by the end of Q3 FY25, driven by festive season demand and the continued evolution of its e-commerce platform. Cost management initiatives. The company has implemented significant cost optimization measures, reducing operating costs at both store and corporate levels. The full impact of these optimizations is expected to materialize in the upcoming quarters, with future operating costs targeted to stabilize at approximately 12% of sales. Growth outlook. Management plans to selectively expand its store footprint in key markets, targeting the opening of additional stores in East and UP. They are optimistic about achieving operational profitability by the end of Q3 FY25, with a focus on mid-single-digit growth in continuing regions. Risks and mitigation. The ongoing economic slowdown and weak consumer sentiment pose risks to revenue recovery. Management is focused on enhancing operational efficiencies and leveraging e-commerce to mitigate these challenges. The company is also evaluating options for capital raising to support future growth initiatives, with total debt standing at 896 crore rupees, of which 106 crore rupees is maturing within the next 12 months. Forward guidance and outlook. Spencer's Retail anticipates a stronger performance in Q3 FY25, supported by festive season demand and the continued evolution of its e-commerce platform. The management is committed to achieving EBITDA breakeven by the end of FY25, setting the stage for sustainable growth and profitability in the coming years. Conclusion. Spencer's Retail Limited is navigating a challenging retail landscape with a strategic focus on operational efficiency and e-commerce growth. The company's restructuring efforts and cost management initiatives are expected to yield positive results in the near term, positioning it for recovery and long-term profitability. Investors should closely monitor the execution of these strategies and the impact of consumer trends on performance in the upcoming quarters. Thank you for watching Smart Earnings. If you found this analysis helpful, don't forget to like, share, and subscribe for more insights into earnings calls and financial results. See you in the next episode.